The S&P 500 daily cloud chart shows the lagging line well below where the baseline 26 bars back concerning the lagging line was for today, 4453.26. And on the S&P 500 2-minute chart, you can see it went above it here at 10 Central Time, had a high of 44.58.30, and then the rest is history. When it went back under that baseline 26 bars back, that was your clue, as the current price bar almost hit the top of the cloud, and the 50 simple moving average was around in that area too, so it couldn't get past that, let alone the baseline and current price. So we're looking at the top of the cloud mainly, and that failed and printed another bearish engulfing candle or bar here. And Powell speaks tomorrow from Jackson Hole, and I'm expecting another Braveheart moment when he was on the block getting drawn and quartered, and the crowd was crying out for mercy and was shown none. So one slip of the tongue from him, if he doesn't stay on script from what he's always been saying about data dependency, etc. And this could move either way. One slip to the upside, one slip to the downside. So the lagging line 26 bars back is closer to the baseline, which is flattening out for a few days. 44.53.26 still, and that's closer than it is to the cloud top here, 26 bars back. But that's an area to watch there, 4280.89. Same thing with the cloud bottom over in current price for tomorrow on the 25th is at 4338.68. And the cloud top is at 4473.35, and will be moving up for the next week or so before it planes out. It looks like the bottom of the cloud is going to have some flat spots here, but it doesn't live too long in the cloud, meaning price. It just doesn't stay in there that long, and it's getting long in the tooth now, as you can see. And the supply line level for the 25th is at 4439.70, and a close above it for end of day on the 25th will qualify it. And it did open above it this morning, but the rest was history. And the demand line has similarities to where the supply was yesterday, meaning there could be a gap down from 4375.55 to start the morning tomorrow on the 25th, and then close below the ongoing demand line, which for the 25th is at 4337.03. And if it does that, that will become qualified, or just a plain open below it. So either one of those could qualify it, and that would be a pretty big deal. And things are getting really tight to the upside. Like I said, the baseline, the Stark band, and the channel 3 higher right together there, and the 50 simple moving average is at 4458.90, so that's well below the top of the cloud. And then the 50 EMA is at 4421.80. That's still a little bit above the cloud conversion line for the 50 EMA. So there's a lot going on here to stop it from going to the upside. and a little looser on the downside. The arc 0.382 is at that level, and the Stark band is right at the bottom of the cloud, and then underneath the cloud is the lower Bollinger Band, and the channel 3 low is right under there, and right in between both of them is the 100-day simple moving average, and a close below that 100-day simple moving average is another milestone. So in yesterday's video I was saying I would just be happy if price could tag underneath the 4,300 level right around here to satisfy the D wave up 461.8 Fibonacci retracement, and 4,300 is the 50 Fibonacci retracement, and then the 61.8 Fibonacci retracement is at 42.4312. So if it gets under 4,300, I said I would be glad to satisfy that criteria for the D wave up 4 projection, but I think we're going to head down there and would wait and see what happens in the 4,300 zone. And the 50% momentum down was qualified as a close under that level, satisfied that rule. So for tomorrow morning there must be an open lower than this close, and then tick lower than this low, and then close lower than the close for end of day on the 25th, and that becomes qualified and confirmed, and this 50% exhaustion down will be qualified and confirmed also. And you can see the rainbow pattern, the 20 in blue simple moving average, and the 35 in red, and the 50 simple moving average in gold. You can see that the 20 went under the 35, and that's never a good sign to have that happen. So the 50 is not that far away, 4458.90. So as long as the 20 in blue here can stay away from going under the 50, then there's a chance for it to head back up and get above the 35 in red here at that level, 4485.93. And again, that's right around the top of the cloud there. So you can add the 20 simple moving average at 4466.56 to that conglomerate up there by the top of the cloud. The 21 EMA is at 44.4373. So, and the chart lines long-term oversold down did print, and again that's for a pressure alert. That's the one we're looking for when there's a P alert down. As you can see, think contrarian, ATM trigger pressure down is up here, and the pressure down did come off its lofty perch here at 102. You can see that it went down and is below the oversold line at 25. It has yet to change over to a pressure up. It would take a few days of being down there to have that happen. And the slow trigger up is pretty close to the oversold line at 25 here. It's got about 4 more points to go if it can make it above that. The fast trigger already made it up to here as I expected that would happen. Now if this can get up above 25, this blue line right here, and start heading up, then we got something. And then the pressure line could just skirt right off of there and head back up, anything can happen, but for right now things are down in the cellar here. So it's best to wait for the long-term oversold P alert here. You'll notice it with the line gets a lot thicker with a P alert down, and this is where you want it to happen, down here, so that it can be an indication of going up there, meaning back over here. But if the pressure line settles in down here and turns into a pressure up, then that will probably stay down there for a while, just like this pressure down stayed up here for a long time on this beautiful run that the S&P 500 and most everything else went up.